Welcome to The Explainer. We're going to talk about something that maybe doesn't sound super exciting at first, life insurance. But trust me, there's been a quiet revolution happening right inside your wallet. And today, with some amazing insights from the work of Dr. Sudhindra C.G., we're going to break down how life insurance went from this really simple, kind of rigid safety net to a super powerful and, sometimes complex investment tool.
So to really get what's happening today, you've got to picture the world of yesterday. And this quote, it just paints the perfect picture, doesn't it? Insurance wasn't something you researched and bought in a fancy office. Nope, it was sold right there at the factory gates when you got your paycheck. It was this simple weekly transaction. But that simplicity, it came with a huge hidden cost. It was totally inflexible. And in a world that's always changing, well, that was a big, big problem.
So, what exactly was the problem with this old model? Well, it really boiled down to one thing. Everything was just lumped together. Your life cover, your savings, it was all in one single kind of murky package. And as Dr. Sudhindra C.G.'s work really points out, this one-size-fits-all way of doing things, it just wasn't helping the average person actually build any real wealth.
Yeah, the big issues really came down to a total lack of transparency. You'd pay your premiums month after month, but the cash value of your savings, it felt completely arbitrary, like a number someone just pulled out of a hat. You had no idea what your real rate of return was. And hey, if you needed your money early, forget about it. The surrender value was a complete mystery. You were basically flying blind with your own money.
But here's the real killer, the biggest problem of them all, inflation. These old policies just couldn't keep up. Can you imagine saving diligently for decades, doing everything right, only to find out that the value of your money has been totally wiped out by the rising cost of living? That harsh reality made it crystal clear that a change wasn't just a nice idea, it was absolutely essential.
So, all these frustrations, they didn't just fade away. They actually sparked a full-blown revolution. The insurance industry was literally forced to evolve. And that led to this massive shift away from those old bundled products towards something way more modern, transparent, and frankly, more powerful for you, the consumer.
And this revolution, it kind of unfolded in 4 pretty logical steps. First, they had to unbundle the policies. That just means splitting the insurance part from the savings part. Then once the savings were separate, they could be linked to actual market investments. Of course, that linkage demanded transparency, so you could actually see how your money was doing. And all of that together created true flexibility, which lets you change your policy as your life changes. See how each step just made the next one possible? It's like a domino effect.
Now, the most important change of all was this idea of unbundling. And honestly, this is the best way to think about it. Old insurance was like a fixed combo meal at a fast food joint. You got what you were given, take it or leave it. The new model? It's a la carte. You can finally separate the insurance protection from the savings part and decide exactly how much of each you want. You are finally in control.
So this revolution gave birth to a whole new toolkit of products, and two of the earliest, most influential concepts to come out of this, especially in the US, were something called universal life and variable life insurance. And these weren't just small tweaks, they were entirely new ways of thinking about what a policy could be. Universal life was a total game changer because for the first time, it introduced flexibility. You were no longer locked into this super rigid payment schedule. Think about it. Let's say you get a big bonus at work. Boom, you can pay more into your policy and boost your savings. But if you have a tough month financially, you could pay less or maybe even skip a payment by letting the policy's cash value cover the cost. It was insurance that finally understood the ups and downs of real life.
And then variable life came along and asked this revolutionary question. Hey, why should your savings just sit there, earning some low, fixed rate? This model links your policy's growth directly to the financial markets. So a chunk of your premium gets invested in different funds, like stocks or bonds. And now, the value of your policy can actually grow or fall based on how those investments perform. It's the difference between putting your money in a piggy bank versus actually putting it to work.
And this, right here, introduces the single most important trade-off in modern insurance. It's so crucial. In the old model, the insurance company took on all the investment risk. Your return was maybe small, but it was guaranteed. With variable life, that risk shifts over to you. So yeah, you get the potential for much higher returns that can smash inflation, but you also have to bear the losses if those investments do poorly. It is the classic trade-off, security for opportunity.
Now, in markets like the UK and India, this whole evolution led to one of the most popular modern products of all, the unit-linked insurance plan, or as you've probably heard it, a ULIP. This product really is the embodiment of all those principles we just talked about: unbundling, market linkage, and customer choice.
So how does a ULIP actually work? Well, it's all built on transparency. When you pay your premium, it's not some black box. The process is pretty simple. First, the company deducts very clear charges for your life cover and for managing the fund. Then, the rest of your money, the balance, is invested. It buys units in a fund that you choose, which is almost exactly like buying into a mutual fund.
And this is where you really take the wheel. You get to decide where your money is invested. So if you're comfortable with higher risk because you want higher potential returns, you can put more into an equity fund. If you're looking for more stability, you might choose a debt fund. You essentially become the manager of your own little investment portfolio right inside your insurance policy.
So all of these features, being able to see the performance, switching between funds, adding extra money with top-ups, they all point to one big idea. This isn't a set-it-and-forget-it kind of product anymore. It's an active, dynamic tool that you can use to manage your savings over the long term.
Okay, so this great shift has completely changed the relationship that we have with life insurance. So what does this all mean for you right now as you're planning your financial future?
To sum it all up, we've moved from this passive, one-size-fits-all product to a really active, flexible system. This new world of insurance puts you in the driver's seat. It offers the transparency to see exactly where your money is going, the control to direct it, and the potential for returns that can actually beat inflation and build some real wealth.
And that leaves us with one final and really critical question. All this new power? Well, it comes with new responsibility. With the potential for reward comes risk. The question for us is no longer just about buying a policy. It's about actively managing it. So, are you prepared to take the wheel? That's both the challenge and the incredible opportunity of modern insurance.